Like to welcome everyone to the Manhattan Alternative Investment Network's podcast for November 14th, 2024, entitled Capitalizing on the AI Megatrend. To guide us through this very exciting and relevant topic, we have two industry leaders and subject matter experts with us today. Ron Insana, CEO of iFi.AI, who's representing Quantum Street in his capacity as an executive vice president, and Marc Weiss, CIO and co-founder of Openfield Capital. I'm Robert Akeson of RMG, the moderator. I do want to say up front that anything I do say represents my thoughts and my thoughts only, not my firm's. For those of you who don't know the Manhattan Alternative Investment Network well, or MAIN for short, we focus on the needs of the startup, small and emerging managers, public and private and digital issuers, and the ecosystems that support them. We are committed to bringing high-value, low-cost content and networking opportunities to this industry globally. We are also very interested in what our members and our audience are interested in, so please let us know what you think and how we can make our programming more relevant to you. Now let's meet the panelists. Marc Weiss, CIO and co-founder of Openfield Capital, has over 30 years of experience in the investment industry. He is the co-founder and chief investment officer of Openfield Capital, which focuses on investing in AI and AI-related opportunities across the public and private markets, and he's been doing this for more than 8 years. Openfield and its investment group have been investing in what they see as the next generation of hardware and software, as well as companies using AI as a disruptive force in growing their businesses. Ron Insana is CEO of iFi.AI, and as I said, is representing Quantum Street AI in his capacity as an executive vice president there. Is a firm generating investable equity portfolios for institutions using AI. Ron has been a senior analyst and contributor for CNBC, where he covers the most pressing economic and market issues of the day, and contributes economic commentary and analysis to MSNBC as well. For 4 decades, Ron has been a highly respected business journalist and money manager who began his career at the Financial News Network, back in 1984, and joined CNBC when FNN and CNBC merged in 1991. Ron is well known for his high-profile interviews and moderated conversations, which included Presidents Bill Clinton, George W. Bush, government officials from former Treasury Secretaries Nicholas Brady to Robert Rubin and Lawrence Summers, to Federal Reserve chairs from Paul Volcker to Alan Greenspan to Ben Bernanke and other leading cabinet officials, billionaires and business luminaries over the last several decades. Ron was named one of the top 100 business news journalists of the 20th century and was nominated for a News and Documentary Emmy for his role in NBC's coverage of 9/11. He has authored four books on Wall Street and is a highly regarded lecturer on domestic and global financial markets and economic policy issues. Ron, somehow I knew you. Before we start, though, I do want to thank our sponsors, and you can see the names up on the screen. They're very important to us. We appreciate their ongoing support of Maine and this call. They include BW Cyber Services, Compliance Risk Concepts, Concertive, DMA, Essential Fund Services International, Miri Asset Securities USA, and Solidus Advisors. Now, just a reminder to everyone in our audience, our panelists will be answering my questions for approximately 45 to 50 minutes or so, and then we're going to open up the floor to Q&A. We do hope you respect that, because I think there's a lot of material to cover here, and we'd like these panelists to be able to complete their flow. But by all means, Start sending questions as soon as you can. And once we end the interview, we'll start asking them. All right, folks. So let's get to it. A good place to begin with is, what's the difference between foundational AI and applied AI? And Ron, why don't you take us out on this one?
Sure, thanks, Robert. Listen, so foundational AI is everything that we've kind of heard and read about over the last several years with respect to building out these tools and systems that allow for applied artificial intelligence to be used in the workplace. So the open AIs of the world, the Microsofts, the Googles, the Metas, the Anthropics of the world have done, and IBM on Watson X, which is our partner in the space, has built out the capacity to engage in utilizing artificial intelligence for a variety of different solutions across numerous different industry verticals. So applied AI is what we're doing at Quantum Street. iFi is a subsidiary of that, where we're taking the power of artificial intelligence and creating models using and ingesting enormous amounts of information. And in our case, coming up with solutions in the financial services space where, for instance, we offer either, let's say, bespoke indexes to institutions that they can then sell to their clients or put into things like fixed index annuities, or we have a financial advisor platform that utilizes artificial intelligence tools that offers expected rates of return on individual securities and ETFs and things like that. The foundational work is all that really kind of heavy lifting that was done by these very, very large capital intensive companies to build out the capacity to do these things. And in a certain sense, it's like going back to the early days of the internet. There was the infrastructure build out that was done by the likes of the Cisco systems of the world and the Intels of the world and all those folks. And now we're doing that again in the AI space with very large, well-funded corporations that are building the foundation for AI to be used in a wide variety of applications, not just in financial services, but in healthcare, in legal services. It's going to touch every industry in some fashion or another. And now that the infrastructure has been built, we can go ahead and apply those tools out in the real world.
Thank you, Ron. Mark, is there anything you'd like to add?
Yeah, I would just say the way to think of foundational is it's a broad horizontal capability. It's you can think of it almost like next generation search, and as Ron was pointing out, a lot of the action is going to be in building applications for verticals using foundational models, and often sometimes not even using foundational models. Building your own models or taking foundational models, fine-tuning them with your data, specializing them, using whole groups of models. I think it was a little while ago on CNBC, they had the CTO of Palantir on, and he was talking about an underwriting application that they had developed for an insurance company, and I think it used like 79, 80 different models. So that's building an app, and it's a foundational model. It's kind of what one big monolithic model that you can use to uh, ask questions to in a generic way and get answers. And and it doesn't mean there's not going to be a lot of apps built on those. Perplexity is a great example. I think their traffic is up 6x this year. No advertising, all organic, because it provides a really great search experience. And they don't build their own models. Well, they build some, but their main models are OpenAI and Anthropics, and they build an intelligence layer on top of it for as an application for search. But the foundational models are, you can almost think of it as like the database in the new stack.
Yeah,
Okay, yeah, very interesting. And
follow up on
Mark,
that a little bit, Robert. It's so we do actually build our own models. We run 120,000 models per night on Watson X, and we
wow.
ingest 1 million news articles in 30 different languages, covering 50,000 global securities that are traded. And then we derive, again, these outcomes with respect to whether it's expected rates of return over a month or a quarter, whether it's an index that is either customized by us or bespoke at the request of a client like an HSBC or a BNP or a Deutsche Bank. And so yeah, we use Watson X as the platform and their large language models, Granite and so on and so forth, and run all that through the mixer, if you will. And our data scientists, train and retrain these models on a daily basis.
Well, gentlemen, this sounds very interesting, but I have to say, I think there are many out there that are questioning whether the billions of dollars that are being spent in this space will see a return at all, or are the AI benefits years off, and that what is available today may not be super valuable. So I guess my question to both of you, and I'm going to start off with Mark, is what kind of progress has AI made in being to help improve productivity for users up to this point?
Well, it's
And by the way, Mark, I think we have a slide here. So why don't we put your first slide up?
well, sure.
There we go.
Yeah.
Go ahead, Mark.
So yeah, so this slide we like to show is this is a someone gave all of the models out there an IQ test. And actually the interesting thing is they gave them an IQ test first, and they all scored better than what you see here. O1, the new model from OpenAI, actually scored a 120, and I think yeah, they were all about 20 points higher. And the reason is that it wasn't that they were actually intelligent. They've been trained on all data, which means they were trained on IQ tests. So they knew the answers because it has a phenomenal memory. What this individual did was that he went to the people that develop IQ tests, goes, develop an IQ test, do not publish it. And I'm going to give that test to these models. And what the interesting thing is the relative distance stayed about the same. And what we're just trying to get across here is like how fast the models have improved. GPT-4, where the first arrow is pointing, had an IQ of 65. And Claude's model from Anthropic has about an 85, and O1 has an IQ about 99 to 100. But this is covering about 18, 24 months. And you moved, an entire two standard deviations to the center in terms of IQ. And actually, what we find really interesting is actually if you can go to the slide on
Yeah, the next slide.
well, not the next one. Go to the one about doctors. Let me
Not
find
that.
yeah, yeah, this one. So I was there. This is about 2 months ago. I got invited to the Stanford Frontiers of Medicine, where they show to a pretty small audience of donors. All the big things going on at Stanford, and this was a randomized study, and they compared doctors using the internet, doctors using GPT-4, and GPT-4 alone in terms of diagnosing pretty hard cases. And it turned out that GPT-4 on its own outdid doctors. And that's an amazing thing. GPT-4 has an IQ of 65 and yet is able to outdo 125, 130 IQ doctors that got 780 on their MCATs, got into a top 5 medical school, board certified. GPT-4 does better than them. But GPT-4 is not really that intelligent. But how did that happen? That happened because GPT-4 is able to train on all data, and a human being can't absorb it. If you have your board certified urologist does not read every article in the journal Urology. And if they could read every article in journal Urology, would not have perfect retention of that. And by the way, would not really know what's going on in other areas of medicine because there's just too much for one human brain to absorb. But GPT-4 can train on vast amounts more data. So it's not smart, but it can outdo a single smart human. And I find that to be phenomenal. And by the way, what's just happened? GPT-4 is now going to be replaced by O1. So you went from a 65 IQ to 101 IQ. And so that we think is going to only widen that gap. And then actually, if you go to that second slide, we find this also be quite important, is this whole idea of agentic AI. Um, there you go. So this is Andrew Ng, who was one of the top people at Google
And
Brain.
Mark, I'm sorry, can we just define agentic AI real quickly?
Agentic AI means using teams of models to answer a question. And you see it today when you go and you use O1, it says it's thinking. It's going actually through a whole bunch of different models to get you your answer. And that's what makes it more accurate. So here you're comparing that you see on the GPT 3.5, this is some coding benchmark. So zero shot means just used, one time. GPT-3 I've got scored a 48. GPT-4 scored a 67. But if you go to that top line again, with using different agentic frameworks, the coding ability of GPT-3.5 improved a lot, even beyond where GPT-4 is, just using GPT-4 once. Now, obviously, if you could use agentic for 3.5 and then 4 is a better model, you could use agentic there as well. And so what I'm trying to get across, going back to that doctor analogy, is the models are getting better. And then on top of that, using agentic. So that was humans versus GPT-4, not agentic. So imagine that being agentic and switching to O1, and then the models of the next 5 years that are going to show improvements. Even if those improvements show diminishing improvements, you're when you can amplify that with agentic. And so that is why there's this big movement towards agentic. And there's certain startups out there, LangChain, Crew AI, that are building these frameworks so people can easily assemble models. Think of it like making a movie. A writer writes a script. Then other people, and then you're going to review what you wrote. Then you're going to send it out to the producer, the director, get comments. Then you make the movie. Then it gets edited. So it goes through a whole series of brains before you get to the final thing. And I think that is what agentic is about. It's why you have companies and not single individuals doing everything. You have multiple minds looking at things, and that's where agentic is going. And that's why if you listen to the Salesforce call, listen to the ServiceNow call, the Palantir call, they're all talking about how you can get really good outcomes, high accuracy, low hallucination rates, and real value add apps when you go to using agentic.
Wow. Very interesting. Very interesting. Ron, any thoughts on this?
Yeah, look, I mean, I think that we're in the process of doing that. So there, as all of this, continues to develop and learn and teach itself, and then, we're on the cusp of, on top of all this, and IBM is one of the leaders here, as are some other firms, going to quantum computing. You're going to increase the speed, the accuracy, and the depth of everything that Mark was just talking about. Now, quantum, in a full sense, may be still, anywhere from 5 or so years away. But there's this whole process, and something Jensen Huang of NVIDIA suggested is that the coding function itself is going to be overtaken by AI, and you won't necessarily have human coders in a relatively short period of time. And so this whole process of models teaching themselves, of learning, taking in more and more data, and more data, as Mark was saying, than any individual could consume. That's something that's effectively inherent in what we do. The 1 million news articles that we ingest every night in 30 different languages is something that no individual can do. And as the power and the speed and the depth continues to improve, in the models, in the technology that is still to come, it's going to make these processes that much more accurate, that much more efficient, and that much more productivity enhancing. So it doesn't really matter what business you're in, whether it's in medicine, whether it's in law, whether it's in financial services, or a host of other industries that are going to absolutely be touched by this. The depth, speed, and accuracy is going to go up exponentially over the next several years. And look, there are going to be job losses and there are going to be job gains. There's a lot that we could talk about, from an economic and social perspective. But the extent to which these verticals are going to become extremely important and, potentially, as was discussed at the beginning, quite profitable for early stage investors, I think is going to be borne out in the favor of those who really use applied AI in ways that assist a lot of different individuals who are in different businesses to come up with one more efficiency and more productivity. It's particularly the productivity part that we're interested in. If you can begin to deliver results, let's say to a financial advisor, for instance, and who will spend less time on back office and maybe even less time in investment management processes, they'll spend more time on gaining wallet share from existing clients or more time to prospect for new clients and build their book of business. So that's when we look at our business and our vertical, those are the types of things we think about, as well as improving the outcomes for investment managers who are looking to either replicate the S&P with less volatility, slightly beat the S&P 500 or any other benchmark within certain constraints that make it a kind of safer, more accurate bet. That's where we think our business is going.
Yes, and Ron, you mentioned NVIDIA, Jensen Huang. I heard an interview he gave recently where, when asked what should we advise our children to do, I think he said avoid programming and
Yep.
technical endeavors like that, and focus in on educational curriculums that give you the ability to imagine things, because as both you and Mark indicated, going forward, it would seem as if this technology is going to enable us to or take the whole issue of processing away from us, away from humans, and leave it up to machines. And it's the creative aspect that we'll be most valued for.
Yeah, it's interesting. I was at an IBM event and we were talking to with one of venture capitalists was speaking, and he was saying, if with respect to our children and what they're ultimately going to study and what's going to be valued at a premium going forward will be soft skills. The
Yeah,
ability
yeah.
to interact with other human beings, the ability to spend that time, the ability to serve a customer with the type of attention that's required from a human perspective. And again, a lot of these other things, as you described it, are going to be, and for lack of a better term, automated. That's probably not the right way to discuss it. That's more of a 1900s
Yeah.
type of description. But to the extent that all these various functions are going to be taken over by artificial intelligence tools, having soft skills, having interpersonal skills, having creativity will become increasingly important going forward. So there will be a bit of a switch away from, let's say, STEM. Not that shouldn't be
Yeah,
learned,
yeah.
but towards other types of skills that we may have already thought were archaic that are going to come back to the fore.
Well, Ron, you
Yeah.
give me great comfort at this late stage in my career. I think I'll finally be able to use my degrees in history and philosophy.
I majored in film, so
It's all good. We're finally going to make it, right?
yeah.
So, Mark.
But it is interesting though that we are seeing LLMs outperform board certified doctors. And by the way, not the best LLMs, GPT-4. But we don't have robots walking around doing plumbing or helping to build a house because we haven't solved that yet. So it's actually kind of there was a very good interview with Sam Altman. He said, we all thought AI was going to affect unskilled first and then move up the food chain. In fact, we're seeing it very differently. And where many people will argue is AI is actually can be more creative. I think there was like AI generated photos have been winning photo contests. And so
How
it's
about the Beatles? Aren't the Beatles up for what is it, a Grammy or something?
yeah,
It's
Paul
all AI
McCartney did something
created.
there. Yeah.
yeah. So it is interesting like that at the big demo AI demo show. And by the way, huge fan of Elon Musk personally. And but the robots that were serving drinks were being remotely controlled, right? So it and by the way, the self-driving is doing pretty well. we know it's improving a lot for Tesla, right? You can follow the comments of people on X about number of disengagements they experience while driving, and each new download it's better than the last one. And Waymo keeps adding cities, and that's doing well. But a robot serving drinks, they haven't solved that.
So Mark, that
You're gonna
brings
have a
me.
tough time in New York City, though. I'll tell you that with self-driving vehicles, because if you've ever done New York,
Yeah.
that's its own unique set of skills that are required to get
So the
around.
technology is not there yet for New York. Okay.
Yeah, it's not ready for New York yet, but but it is improving, and it is, you can go to San Francisco and a couple other cities and actually get a self-driving taxi. So it is actually being deployed, although small scale today. But we don't have robots that can serve you a drink or fix a plumbing problem at your house.
So, Mark, I think we can conclude from your remarks, at least, and Ron's as well, that the LLM models themselves are getting smarter. So, what other ways do you see AI accuracy being improved so that the output of AI results become more workable, more reliable?
Um, well, there's this is it's a pretty controversial point. One of the co-founders of OpenAI is out there saying, "Oh, we're starting to see, really diminishing returns on improving the AI models." Uh, but a lot of people will counter just the recent boost in the model's accuracy, plus the adoption of agentic, is good enough for big rollouts of what we have right now. So uh, and we also need to keep somewhere in the back of our mind that there is a potential for another major innovation that we just don't know yet, and that's hard to predict. And what I mean by that is, if you go back to the neural nets that beat the world's best Go players, that was boy, that was a long time ago. But it was before transformer architecture was developed. That transformer paper by Google in 2017, that's what led to all this stuff that we have with LLMs. Because before then, the primary architectures were CNNs and RNNs, and they were very brittle. You could have a CNN identify, oh, that's an elephant in the photo. You could change 3% of the pixels, and then the CNN would not recognize it was still an elephant. A human could, but the CNN broke down. And there's a transformer architecture that brought all this great new capability. Now, I imagine inside all these top firms, from the OpenAIs to the Googles, Microsofts, Amazons, Meta, that they're all trying to work on new algorithms. But we don't know. That's hard to predict. When's the new leapfrog going to come? But everything is happening today is based on what Google published in 2017, and I just wonder what management there thinks about their decision to publish that, because maybe they shouldn't have and kept it internally.
Well,
Sure.
Um,
it's interesting, if I may, Robert, to build
Please.
up Mark's thing, to put this in like true historical context, AI is a lot older than people realize. In the mid 1950s is when the expression was first coined, and IBM was among, and again, full disclosure, we're a platinum partner there on Watson X. They started this process and began to develop these various models that were, as Mark was saying, brittle, but it led to Big Blue beating Gary Kasparov at chess. It led to Big Blue winning at Jeopardy. It led to the Go experience that Mark just described. And this has been a wildly iterative process now that is more than uh, you know 70 years old, and it's been building upon building. There's the functionality that's called back propagation, where the models learn from their own mistakes and continue to grow. And so this has been coming for quite some time, and now we're reaching that kind of critical mass stage, if you will, for lack of a better description, where these things are going to start to accelerate in terms of quality, the deep learning models, the LLMs, and so on and so forth. That is building on decade upon decade of experimentation and experience. And so when everybody thinks of this as being kind of brand new, it's not. It's been coming for an extremely long time. And there was a lot of early experimentation that was done that was, kind of hit and miss, and far less so now. And as Marc was saying, we don't know what that next, little quantum leap is going to be, and it may very well involve quantum computing as a function of getting more power, more depth, more speed, more accuracy. We'll see, but certainly to date, it's extremely impressive. But it's not quite as new as people think.
Well, Ron, if you take what you just said maybe one step further, it kind of reminds me of in the ancient world, we had bards that went from town to town reciting poems and other literary works like the Iliad and the Odyssey. And anyone that's looked at those books, they're thousands of almost 1,000 pages, and that these bards would memorize the books, the poems, the culture. And they were the mediums for transferring this knowledge from one generation to the other because techniques for writing weren't quite as well developed. And we certainly didn't have computers. And it almost sounds like this evolution involves the retention of data increasingly being outsourced. And so we don't have to rely as much on our own memories for this capacity. It's going to be outside us increasingly, along with decision making in some cases, which would free us up again to be more creative. It sounds like.
Yeah, and again, we saw this iterative process take place in the early days of the internet. So I remember in the 1980s, I was covering companies that were getting taken over, and they were generally large content companies like McGraw-Hill or some of the encyclopedia companies. And I kept asking various players in the financial world why this aggregation of content was taking place. And even in the 80s, you started to hear that, look, all this stuff's going to end up on a computer, and we're all going to have access to it at some point in the future. This is pre-Google, right? This is way before. This is pre-AOL even, that people started understanding that the ability of computers then, and then as we grew the networks out, as we grew the internet out, and the World Wide Web, if you will, began to proliferate and then turned into something we more commonly now call the internet, which turned into Google with search capabilities. All this data was ingested into the system so that we would have access to it, and that there was this enormous, personal library for anybody who wanted access to information. And this is all now being leapfrogged with AI. And so again, we're building upon something that's now close to 40 years old, 70 years old if you want to go back to talk about the early discussions of AI. But since the 1980s and moving forward, the build out of the infrastructure and the capacity of the internet that is now, evolving or being revolutionized by AI is just another, step in that sequence where, cloud computing obviously was integral in that as well, where this repository of information, no longer in the bards, no longer in those who would sing oral histories or kind of musical histories, so people retained or learned that information. This is where we're going to go and get it.
It's very exciting, very exciting. And gentlemen, before we move forward, I just want to ask Marc, have we seen all the charts that you wanted to discuss with respect to this question?
Oh yeah, actually, no, it's
Okay,
just one more. I think it's the next one after this one.
let's go.
Um, yeah,
Yes.
so this is something this is a measure for general intelligence. Something's called the ARC prize. And what it's specifically designed to do is for it measures the ability to learn in the moment. It shows you patterns, and then you have to figure out what's the thing that doesn't fit that pattern. And it's something that is specifically designed that you really can't train on it beforehand. And you can see that the what you're seeing on the right, you're seeing, Gemini, which is Google, GPT 4.0, they're scoring 8%, 9%. The goal is to get to, humans scored 85, right? That's where humans are. But then you see the O1 MIDI, well, 13%, and then Sonnet 3.5 from Anthropic and O1 from OpenAI 21%. So big improvement from the older models, a double, which is actually really a big step forward, but really far below where humans can score. But then you have this coming out there called Minds AI and Greenblatt, and they're using a variety of techniques. Agentic is one of them. They don't share everything that they're doing, but they're scoring a lot higher. And what the point we're getting across with this slide is that this is the value of agentic, is that you can end up with a much higher score than the big giant foundational models can do just on their own. And the big models are also improving. That's also evident here, but also shows there's a lot of work to go. We don't have an AI that can do better than human here yet. So it's just, but it does show that there's improvements happening, and the power of using a whole bunch of other techniques than just using, asking a model once to take a look at things to get an answer. There's something, you can do a lot more beyond that. And that's why we think there's going to be really a great opportunity investing in very specific vertical app companies that use these techniques to give you an answer that's better quality than what you can get just from a foundational model on its own.
Very exciting. And so let me turn to Ron for a second. Ron, given all we just discussed with respect to agentic AI, is Quantum Street using it right now?
Agentic? No, I don't think we're there right now. I know
Okay.
where we are with respect to IBM and the models that we use at Watson X, which is great.
Okay.
That's the most.
Okay. Okay.
What we're trying to do, obviously, though, referencing what Mark was talking about, and we will get there. I mean, clearly, and we'll get to quantum and everything else. But what we want, and particularly since we're focused get to the point where our directional accuracy is about 70%. So that when we put out a forecast of what an individual security or an index or a market will do, directionally 70% accurate. The theoretical limit is 80%. And one of the ways you get there, and one of the things we talk about is like you could be directionally accurate but be off by a mile, right? You could forecast something that's going to be up 3% in 30 days and you're up 0.1%. And directionally you're accurate, but either somebody's going to make very little money or lose money on that expression. We want to shrink that error rate, which something like agentic is going to help us do over time, and get those forecasts as close to actual performance as possible. And that determines not just forecasts of individual securities, but then how indexes perform, how these various products that are being built out on our platform will perform, and how much adoption they'll get. Because humans, generally speaking, if you look at the history of some of the most sophisticated investors in the world, if they are right big 51% of the time and wrong small 49% of the time, they become billionaires, right?
Yes. Yes.
So we're working on not we're not making claims that's going to happen, but we want to use all of these various tools as they grow, as they become developed, help us become more and more in our forecasts and our product development, and then also in the process of assisting individuals and professionals.
So Ron, let me do this. In view of what both you and Mark have said about the buzz, the momentum that this technology has, I want to circle back to a question we posed earlier in this conversation and frame it in a slightly different way. And I want to direct it at you, Ron. One could say there's been a certain amount of hype associated with AI, right? And it's certainly been reflected in the surge of share prices. And we need to look no further than the NVIDIA's, Microsoft, Google, and others. While OpenAI has been given an extremely lofty valuation. My question to you is AI in a bubble?
Not yet. And I'll tell you why. So first of all, the bubbles are very specific market events that happen on a repetitive basis, but generally are spread out over time and have common characteristics, some of which are not yet evident, right? So I wrote a book about bubbles going back to as have others. Edward Chancellor's done this. Charles Mackey's done this. A whole host of economists have written about bubbles that go back really as far as human markets exist.
Yes.
You can go back to Sumeria and find
Yes.
evidence of bubbles in ancient times. But so there are some common characteristics. Number one is that there's an introduction of a new technology or a new idea that catches on with those in the know. And that's kind of what happened in the world in the private market value, where OpenAI is close to $200 billion. You've seen several stages that follow before a bubble is fully inflated, which includes massive public participation, which includes hundreds or thousands of companies going public, which we saw during the internet era, some of which are unprofitable. And during the internet days, vastly different from what we're seeing here. We had hundreds of companies go public with no revenues, no profits, and in some cases, no product that was yet viable. And they raised money to advertise in the hopes that their product would become viable. When you look at the companies, the Magnificent Seven, as we like to call them, they have enormous cash flows. They are, even if they're valued richly right now, they are extremely successful. They're sitting on huge piles of cash. They're building out these models. They're laying the infrastructure, if you will, for this whole revolution to take place. And it hasn't really yet met the criteria of a bubble, where there's this wild public frenzy around, really dodgy companies that don't have a plan, and this huge proliferation of IPOs, and just all kinds of crazy activity that's typically associated with a bubble. And we've seen this. We saw it in the 1870s with railroads, even though it was
Yes.
real infrastructure. Right? We saw it in the 1900s with automobiles, with electricity, with electric utilities. We saw it in the 50s with electronics. We saw it later in the 90s with the internet, and we saw it in Japan. We saw it in with oil in the 1980s. There's a lot of different examples about.
So Ron, you're saying, and you're being very clear about this, I think, past in some cases can be prologue.
Sure.
So given that,
So
not yet, right,
yeah.
right. And of course, what really matters is our ability to see the future, right? I mean, by the time we're in the future, it's kind of too late, perhaps, to get into it, right? So given that, and given your vision for this, okay, and then I'm going to come back to Mark on a more specific question related to this, but I want to ask you, Ron, given your broad perspective and your years and years of experience on the street, okay, which industries do you think stand to benefit most from AI use cases at this point in time? And then I want to ask Mark. I got a specific question for Mark in
mentioned
this
one,
area.
and then certainly healthcare is going to benefit, disproportionately from this. I mean, when it comes to, and radiologists are going to be affected by this, and not yet surgeons. We don't have robot surgeons quite yet, and maybe one day that those robots will be guided by both AI and human intelligence simultaneously. But certainly healthcare is going to benefit. Law, back office for almost every industry, doesn't really matter what it is, where more mundane tasks are going to disappear into the hands of artificial intelligence, because and we know this from just things like ChatGPT that can write your thank you letters or can give you an indication that a client needs to be contacted, or so on and so forth. Financial services, most certainly. We look at this, and in the next 5 to 10 years, we believe that 90% of investment decision making is going to be driven by AI. It doesn't mean that everybody's going to go away. It doesn't mean that every chief investment officer is going to disappear. But really, and again, it's also going to be in transportation, in logistics, in infrastructure. I can't imagine that there's not an industry that's not going to be touched by it. There might be some higher margin opportunities in financial services and
Sure.
health and places like that, where your risk reward is going to be greater. But from my perspective, and again, we saw this really with the internet. There hasn't been a business that hasn't
Yes.
been touched. When you look at what Amazon did, to rival Walmart, or you look at now what Tesla's doing in EVs, and what they and Waymo and others are going to do to autonomous transportation. All of this is AI driven, right? I mean, not to pardon the pun, but I mean, this is all going to be affecting every single industry, and it's of course critical from a geopolitical perspective and geoeconomic perspective for the U.S. to remain at
Yes.
the forefront of that process.
Okay. And so now, Mark, Ron just mentioned medical services or the medical industry in particular. Um, do you have any thoughts on how AI is impacting the medical field at this point in time?
Well, I think we're at the very early stages of it. It's are we is AI being used to diagnose right now at a broad scale? I think it has to go through a regulatory process, and that takes time. I think what Ron did, I was interesting. I was at a Cowen event. It's got to be like 2, 3 months ago, and the CTO of RadNet was there, and we had an offline chat afterwards, and we were just talking about how everyone predicted years ago, oh, all the radiologists are going to be put out of business, and it just didn't happen. And that's because they had to go through a process. You have to really take a lot of time. You got to build up data. You got to make a case. You have to go through some FDA process, not the same as you go for a drug approval. And but he and I were agreeing. Now it's really starting to happen. So a lot of these things take time. Each industry is going to be different. The medical industry is heavily regulated, and for good reason. So I think it's starting to happen. When are you going to have broadly deployed AI diagnostic assistant assisting a doctor and make a diagnosis? Um, I I don't know exactly when that
Excuse me, Mark. Does
happens.
that chart
I
the
know of a vision care
Yeah,
company
sure.
that has an AI tool that does a retinal scan that can give you 2 years advance warning as to whether or not you're going to have diabetes, heart issues, or other illnesses
wow?
by doing eye
Yeah,
scans, retinal scans, and things like that. And that tool is being rolled out. So it is happening in real time.
Yes.
yeah,
So, Britt, why don't we go to the slide? It says today GBT4 alone outperforms doctors. I think that's the slide. Correct, Mark?
yeah. Yes,
Yeah,
that's
let's
right.
take a look at that again if we can, if possible. There you go.
Yeah. So this says, on the surface, don't go to your doctor, go to GPT-4. And by the way, the person presenting this says, is that what this slide means? And he goes, of course not. What it does mean is that what you really want is we got to get doctors used to using GPT-4 because probably a human combined with a doctor is going to do much better than just GPT-4 alone, but it's not there yet. And so the models are getting better. There's going to have to be you're going to go through an FDA process. So what you don't want is someone being misdiagnosed by AI because that could also be a very bad thing. However, we do know about, I think, 250,000 people a year, I think, are dying from misdiagnosis. That is a much higher number than, I think, about 35, 40,000 people die in highway accidents or traffic accidents. The people that die through misdiagnosis, far larger problem. So having significant improvement here is literally going to save lives. But before it gets rolled out broadly, we're going to have to, get doctors used to using it. There's going to be a training process. I think even when it comes to AI for radiology, today your radiology result goes through your image goes through two levels of radiologists, right? They're double checking each other. No one's thinking of getting the human completely out of the loop yet. You may get one of the radiologists out of the loop, but not both. And maybe eventually it'll be both. And as the models improve, however, there is an adoption process, and a certain amount of caution probably is warranted. You don't want to run, but as Ron says, it's being done in every aspect of medicine. Pathology, what a horrible thing! But you're looking at in a microscope, looking for the slide, trying to find cancer cells. It's like it's looking for like a needle in a haystack. It's terrible work for a human to do, and having AI help you there is going to be a big thing. So it's happening in pathology, it's happening in radiology, it's going to happen in diagnostics. Um, we're invested in a small private company called Vista AI. They literally automate an MRI machine. They do things that operators used to do, and they started out with the hardest and most profound uh, MRI workflow called a cardiac MRI. It's literally hundreds of images. you can be in the machine for an hour and a half, getting a cardiac MRI. I don't know about you, but if I had a heart condition, going into an MRI for an hour and a half I think would give me a heart attack. I would never want to do it.
I
You
just
Well
do
did
it.
said.
35 minutes in one, and it's not fun.
Yeah,
Yeah.
and this way
Well
you
said.
automate it. It could take you 30 minutes to 20 minutes. And Brigham's Women's Hospital, there's presentations you can find online.
Right.
They gave it to the operators and they said, you see if you like it. And they all adopted it because it makes their life easier. And
Right.
now they're able to get twice as many patients through an MRI machine a day by
Okay.
using this technology. So it is getting deployed, but is this deployed across hundreds of MRI machines yet? It's just starting.
Yes. And in our remaining moments, Britt, why don't we go to the last slide, the new AI stack, new players, okay? And I'm going to pose this question to both of you, obviously. I think it's fair to say that our audience is looking for a general roadmap as to how these AI investment opportunities might unfold. So, Mark, I'm going to ask you to take us through this, and then I'm going to ask Ron for some of his thoughts on this. So, Mark, again, in the remaining moments, we're short on time. Let's talk about this.
Sure. So we're making the point that the value has clearly shifted, and you see it in the stock prices, right? Intel in the year 2000 was one of the top 10 market cap companies in the world, and it's off that list, and it's most likely never going to get back on it. And in the later end of the 90s, Oracle and Microsoft, and those are companies that operating systems, databases, that was the stack that mattered. And then cloud came later, but still built upon databases and CPUs. Now all the application development focus is on AI, and now it's a new stack. So instead of it being built on a CPU, it's built on a GPU, and it's you build these foundational models, or also your own individual models, and then you take those models and as a team using agentic workflows, and you build new applications. And we think this is where things are going. And it does relate a little bit back to that question you said before about, are we in a bubble? And I would argue we're not in a bubble, but we may have some degree of overvaluation. And the reason is there's very few pure play AI companies that are public. They're private right now, and Perplexity is doing the financing as we speak, and this is a company that's challenging Google and search. Meta says they're going to enter that game too. They're adding a search bar, obviously at OpenAI. Search is now up for grabs. Hasn't been up for grabs in 20 years. And maybe Perplexity will be a very large public company one day. And I think we're going to probably have 50 to 100 really interesting public AI pure play application companies. Right now, as an investor, you're investing in public stocks. Well, you can own NVIDIA. You own things that are indirectly related to, Microsoft. What percent of Microsoft's revenue is AI? It's
Right.
it's 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 single digits,
Yeah.
and yet we're giving it a 40 multiple on 2026 free cash flow. Now, that's not a bubble, but you might say that's a little expensive.
Yep.
Tesla is 162 times 2026 free cash flow. That's rich. Now, it doesn't mean that this is not like 2000 to 2002 when companies like Akamai came down 95, 98%. Tesla's not going to come down 95, 98%. Is it perhaps it should come down 30%, or the stock is sideways for a while as it boosts its free cash flow numbers. So it doesn't mean we're
Right.
in a bubble, but what I do feel there's an imbalance between demand for AI names and supply of AI names in the public market. So I think the action is private right now, and when these things start going public, then advertisers, I mean, investors will have more to choose from, and they will have the opportunity to maybe to say, well, it's nice to own Microsoft, it's nice to own Amazon, but I'd rather own something that's 80, 90% AI
Yes.
driven revenue versus things that are, maybe by then Amazon and Microsoft will be 15, 20% AI, but then money may leave those names to go to pure plays when
Yes.
there's a lot of pure plays that are public, but it's not now.
Thank you, Mark. So let me turn to Ron. Now, Ron, you already weighed in on whether this was a bubble or not. So let me ask you a slightly different question. As real world applications of AI proliferate, what do you think are the most likely outcomes of its expansion in the economy?
Well, I think, it inherently these types of technological innovations or revolutions, however you want to characterize them, are disinflationary. And so on the one hand, while we may be worried about some of the political risks going forward, tariffs, deportations, and things like that, that could be inflationary with respect to economic activity, as we saw in the 1990s and the advent of the internet and the proliferation of it, it is inherently disinflationary. It brings costs down over time. It is somewhat disruptive with respect to how employment grows or doesn't grow, or who is paid a premium versus who finds themselves at least temporarily displaced, sometimes permanently. But there are multiple aspects of these revolutions that affect the broad economy. And again, broadly speaking, what we see is they generally tend to drive down costs, enhance productivity. And by the way, the U.S. right now is going through a productivity boom, even as we speak. When you look at the rest of the world, the U.S. is outperforming by orders of magnitude when it comes to the productivity that we're seeing in the U.S. economy. And these both the foundational pieces and the Mag 7, all those different companies
Right.
aiding that process. But then when you get into these companies that Mark was saying, the applied AI affecting industry groups, across, every different vertical, there will be an impact on cost.
Okay. And so, in view of what you just said there, Ron, that the be product or there are currently the economy is currently experiencing enhancements to productivity. You, as a practitioner in the investment space at Quantum Street AI, are using certain tools in your craft. Okay, what advantages do you see to that? And really, what are the risks at this point? Because I think we talked a little bit about the advantages earlier. Just curious to get your input on the risks. In our remaining moments, we have only got a couple of minutes, so if you can just be quick on that, thank you.
Yeah, so there's the ever-present risk that people worry about, that all this is heading towards Skynet and the Terminator, right? And we're going to kill
Yep.
ourselves with some military application. The risk is that at some juncture these tools don't perform as well as we want them to, and don't in our world, in the financial world, don't deliver better than human outcomes. I mean, that's the risk. Will we be able to ingest enough information? Will it be trained and retrained appropriately enough that the outcomes will be better than they currently are? And that is obviously the hope. And with respect to assisting financial advisors as opposed to creating indexes, will this deliver enough productivity enhancement? Will this give them more time to focus on building their books of business as opposed to doing back office or engaging in investment management practices, so that they can increase the size of their business and by extension
Yes.
increase the multiple on it? And that's either whether they're independent or part of a firm. The multiple that's put on your business is wildly determined by your assets under management. So can you grow your business using our tools and increase the underlying value of the business because you've gained that productivity enhancement, the efficiencies in the back office and in the investment management space? So those are the things that we're hoping for. Look, the risk to any of this is that it doesn't work as well as we want it to. Um,
Sure.
but that comes with hopefully our ability to train and retrain models and take advantage of new developments in the space to become ever more
Yes. Okay.
successful in what we're trying to do.
So thank you, Ron. So listen, in the remaining moment that we have, I'm going to invite both of you to make very brief closing comments. And I'll start with you, Mark.
Yeah, I
Any
would just
closing
say,
thoughts, summary
yeah.
thoughts?
Well, I think we're in a good spot with AI in that it's really starting to get deployed, and you see people voting with their feet, right? No, people using Perplexity AI in the traffic growth there. We think it's a great example. People wouldn't be using it if it wasn't producing what people consider value-added results. And we saw what Stanford is showing, that we are going to certainly improve the ability to diagnose patients, and that's going to save lives and save tremendous costs in the healthcare system, which is, a huge percent of our GDP, and you can often view it as a pretty expensive tax, especially when you look at what the U.S. spends as a percent of GDP on healthcare versus other countries. If we have improvement in productivity there, it's massively good for the economy. But I'd also like to point out that I think there's going to be discontinuities. Not everything's going to go smoothly. To really make robotics happen, to have robots build a house, we need a new type of AI. I think we need a very low power AI. This is 20 watts. This doesn't, we do not need a nuclear power station for us to be intelligent, but AI does. But you want that AI and a mobile robot that can, a team of 20 of them that can build a house for us and maybe a third of the time and help solve a lot of our housing cost problems. That technology doesn't exist yet. But I believe it's coming. So I think that it's what people should be. We shouldn't extrapolate the great things we're seeing in LLMs so that's going to happen in every sector for AI for doing things beyond what LLMs do. The LLM
Okay.
thing is real, it's big, but it doesn't mean universally that AI is going to happen at the same pace everywhere. But I believe the innovations will come, but it's not a straight line.